Hello, trust everyone. Welcome to our new webinar. We have some issues with TradingView connections. Seems like everything is very slow today. So I'm not really convinced if we will be able to continue with this webinar. I'm not sure if you can see my screen well, or is it lagging? Can you see can you hear voice? Because I can see some very slow connections here. Okay, so looks like that everything is fine now. Okay, so we will begin with webinar. So sorry for these interruptions. Looks like that, I don't know, maybe my internet connection is slow, or maybe there are a lot of people trying to broadcast through TradingView to different platforms. So we will start, as you know, with the US yields. As normally, we had a pretty interesting open. Today, we had a very volatile moves on metals, particularly on gold. As you know, we have seen a strong move to the upside. So there are a lot of stuff to cover. But before we go to some metals charts, as I said, I want to bring your attention to this US yield, because US yields, obviously, or interest rates, are going to be probably the most important going into 2024. So we are seeing dollar coming to the downside for the last couple of weeks, mostly driven by bets that potential rate cuts could occur in 2024. But Powell, however, somehow on Friday noted that it can be a little bit maybe too early to say that they are done with hikes. Obviously, the inflation target is still not there, but certainly if this data will improve over the upcoming weeks and months, then I'm sure that even more bets will be in this field for lower US yields, and this could potentially mean that US dollar could fall much lower. Fed do at least at the start of 2024. Okay, so the US yields are coming to the downside. As we said last time, I think that wave 5 is in place, and even if we see only temporary free wave drop, I just assume that there will be even more weakness here and lower prices until we see this correction completed. So in the meantime, when the US yields are trading down, we think the dollar index will also experience more weakness, potentially even retest this very big 100 level. Also, if we take a look maybe on bunds, now I will try to be a bit slow here so that maybe charts will not lag that much. So as you will see on this chart, they're also seeing some very nice recovery here. We are seeing prices coming out of this wedge pattern. So I'm thinking about more gains here, and obviously now this potential dollar weakness that could show up or major dollar currency pairs will obviously be defined by the rate differentials. So what I think is going to happen is that US yields could fall much faster compared to the one in Europe, and this could potentially make a very interesting bullish scenario for the euro dollar, like has been the case in the past. So looking at this chart, I think that this differential is showing a very nice potential support zone here. While at the same time, obviously, if these cycles are really about to change and we are going to see lower or at least no change regarding the rates, I think that euro dollar has a chance to cover. Okay, so I will look now also on euro dollar, and you can actually see that as we also already discussed last time, we have actually seen a pretty nice strong move to the upside on the euro dollar, but some other currencies are doing much better. So what I'm thinking is going to happen is that at some point even euro dollar will try to catch the upside here compared to the other currencies. But looking at this structure, I still think it's a very nice potential ABC flat formation. We are now seeing some reversals here for the start of the new month, which, by the way, is not a surprise to see dollar recovering, because we have seen a pretty strong move to the upside on stocks, and going into the end of the year, there can be some profit taking, and obviously this will impact the US dollar. So I think that this correction is totally normal. And what I would be looking at here for this week on the euro dollar intraday chart is I will track this ABC drop. Okay, so for now we still have only wave A to the downside. So for me to be long euro would obviously be too soon. I want to see something more complex here, or at least simple as a zigzag for a wave 4. That this correction was quite more complex here for wave 2, maybe even wave B. Definitely I will be then looking for something more simple here if that's wave 4. So very nice support could be here around 108, but as I said, I'm watching this level to be maybe retested with free wave movement. Okay, if we see just one leg to the downside into that 108 level, then it's not going to be good enough structure for me to look on the long side. Okay, even if from any reason still euro would bounce, I definitely keep an eye on the structures. So I still think that euro dollar bulls are very good and could continue higher maybe later this week, but we should stay above 107 level. If 107 is overlapped, then something is changing, and as you know, then unfortunately we will have to look back to the downside, probably for 104 retest on the euro. Okay, but I still think that in 2024 euro dollar could see much more gains, okay, in 2024. Now let's take a look also on cable. So cable is also making some interesting recovery, but looking at this recent price action, we don't really have any completed intraday 5-wave impulse yet. Maybe it's still in progress here if we are going to see more upside, but for now that's still not the case. Okay, so I think you have to be very careful here regarding cable. I think that it would be much safer to look for more upside, maybe back towards 2023 highs, if we will have these 5 waves unfolding within current extended wave 3. So I'm patiently watching what will happen on pound this week. I think it can be a very important week if we can rise back above 27.40 while we are above 125.60. I think that this would be a very interesting bullish scenario for cable. But at this stage, I just think that it can be a little bit too early to look for potential loss here. But I'm definitely in camp of the of pound. I definitely think that there can be some interesting opportunities on the long side, but I just think that it's a little bit too early at this stage, at least for me. But I will certainly be tracking price action very closely this week. Now let's take a look also on Aussie. So Aussie dollar has recently came nicely higher. I think that major bottom could be forming here, but we stopped at this trend line resistance. And as you know, we have the RBI rates decision this week. Its expectations are for 4.35%. In November, they raised rates because of inflation miss, but the next inflation report will be, I think, in January because they have quarterly reports. So I assume that they will now stay on hold, and this could potentially keep Aussie challenging around this trend line. So I'm not really sure if we will see very strong break to the upside just yet, but of course all will be regarding the message from governor if they will be looking for further hikes or not. But since we have this inflation data still far away before it will be released, I just think that we may not get any real signals from the RBIs. But eventually in 2024, I just think based on whole dollar story, I just think that Aussie could really do well. Also, it's not only that, we have also dollar Chinese yuan, which is coming to the downside. So what we are seeing here, as we already discussed last time, is that potentially we are in a new higher degree ABC drop. Okay, so if we are really here going to see further gains of Chinese yuan, of course, this could be positive for Aussie. And what I like so far here on the intraday charts is that we have a pretty nice strong drop here, and the price is quite stable at this level. So I think that we are now just consolidating here before we could potentially see even lower prices. So even if there would be just a short-term weakness, I still think that there is a very nice resistance here at these swing highs from last week. So if we'll see more weakness into wave 5 or 3, I just think that Aussie could maybe benefit from that move as well. Also, I want to look maybe at dollar CAD today. Why? Because we have also Bank of Canada rate decision as well. They were on hold last time, but the unemployment came up to 5.7 from 5.5%. The inflation also is coming to the downside, so they surely can stay on hold. And if that would be the case, maybe CAD will move to the downside. In other words, dollar CAD could see some recovery, especially if dollar index will continue to consolidate. So what I'm watching here for dollar CAD this week is definitely 135 down to 134 level, which could be very interesting potential support. Okay, so I think that there could be some price stabilization if Bank of Canada will really give us a signal that they are done with hiking rates. Then I think that this pair could be trading much higher. But I would be maybe even willing to look for some CAD shorts. Maybe we'll also check some of the crosses. But for dollar CAD to continue higher, you definitely want to see maybe 137 first, and then you could be looking to buy the dips. But it really all depends how the market will respond to this event of Bank of Canada rate decision. Also, keep in mind that CAD and euro are quite weak compared to the other currencies. Okay, for actually it's been the case since start of November. So I think that these two definitely, if dollar would somehow attract or find some buyers, euro and CAD could really see much more weakness. Let's not forget that crudeoil is also coming to the downside. Now let's take a look also on maybe on dollar yen, and I will also look at the euro yen. But why dollar yen is because I have two different wave counts regarding these short-term structures. But before I go to the intraday charts, let me just remind you that you are at this lower trend line here, this bullish channel. So it's a very important key level for dollar yen, and unfortunately we do not have any kind of a clear price action that would increase in odds either for bullish or bearish direction. As long as this trend line holds, I just still think that this could easily be a wave forward. But I realize that if US yields will continue to the downside, that dollar yen could also move to the downside, especially if we also consider the speculations that maybe Bank of Japan 2024 could potentially make the policy changes. Okay, so this could easily be a way for, let's say, if we break 150, again, dollar yen could be bullish. Okay, but if suddenly, let's say that we start breaking 145 level and maybe trying to smash out this swing close here and swing highs going back from July and August, actually from summer of 2023, if we break this level, then I think that market will change its direction. So I prepared also another wave count here. This interpretation shows that maybe somehow this could be a 5-wave drop from the highs, but as I said, I really should see a 145 broken, and definitely prices should be stable below the trend line support before I can say that maybe dollar yen has found the top. But I really somehow try to avoid trading Japanese yen, just generally speaking, because we have risk on mode, and the risk on mode, I'm not really sure I want to be looking for some longs of Japanese yen. As you know, Japanese yen is also historically speaking, like US dollar, can be a safe haven when there is a risk off move. So obviously there are some now not the perfect correlation with the stock market. And that's why I will try to avoid these pairs. Even if you look at the euro yen, I mean, in good times when the stocks are trading to the upside, you would see also that euro yen obviously would be in uptrend. But notice what is happening on the euro yen. It's coming quite aggressively to the downside. So I think that we have some top in place here, and that we could actually be in a higher degree correction here on euro yen. So if something changes dramatically, let's say that we see stocks coming aggressively into risk-off mode, I just think that euro yen, because euro overall is very weak, could be very interesting for more weakness. So I just think that euro yen here stepped into a higher degree correction, which could last for weeks. Now let's take a look also maybe on gold and silver. Okay, so I will show this chart first. Okay, so what we have seen is some very interesting move to the upside on gold. As you know, we have seen a strong break higher. It was a lot of optimism going on already at the end of last week. So Friday was pretty strong, and that's why I'm not surprised that we have seen at the open of this new week also some volatility, which sent gold close to 150. So unfortunately, bulls were not being able to hold these levels. We are seeing some reversals now, and this current price action at the top is gold reminds me to the one that goes back to 2020, 2021 on silver. It was a very similar situation. We had a pretty long consolidation here. Everyone tried to run bullish price action on metals because everyone ran into safety because of COVID situation back then. And what actually happened, it was overcrowded reaction. Market does the opposite. So I'm afraid that something similar maybe could be here on gold now as well. I'm not convinced that that's the case, but I'm just trying to highlight what could really be happening here and be prepared on the opposite reactions rather than just blindly be focused on the bullish price action. Because it's Monday, by the way, here was also on Monday back then on silver when prices reached new highs and then reversed. And now we have some very similar price action. And if today, tomorrow, we will not see any new buyers coming in, I just think that gold will either stay sideways or even will continue to the downside for back into this range and will be trapped in these levels for for months, if not more. Okay, so I'm just afraid that this is not really a good bullish signal at this stage. Okay, we'll see what will happen still till the end of the week, but at these levels with this price action, just be careful. Okay, now let's take a look also here on some of the wave counts on gold. So I still think that maybe as long we are let me just switch the colors here. Okay, as long we are holding this 2000 level, it's a very strong bull bear line. Obviously, as long as we are above 2000 level, there's still possibility that maybe you are now in a corrective phase and that we'll see more upside. But if we break 2000 level, then this overlap into this wave one will definitely invalidate the wave count. But what then may happen is that the whole price action from that October 2022 lows could even become an ending diagonal. Okay, so because in each leg then you can have a free wave. So even under these circumstances, we could stay bullish, but wave 4 will keep this price action sideways maybe for 2024. Just keep in mind that if we break 2000 level this week, and if we do not revisit these highs from earlier from the open by the end of the week, then I think that gold will most likely stay sideways trapped in the consolidation. So I think that easy trades, easy money now for gold, at least if you're a short-term trader, are gone, and that maybe, especially if you're looking for longs, obviously, and that maybe it's good to be on a sideline for now and just wait on price action to unfold to a bit better structures. Now, if we take a look also on silver, so silver also is not really breaking higher yet. We see prices that stopped at this trend line resistance, and now the price is trying to come back to the downside. So I'm just afraid that it's a little bit too early to say that silver is breaking out. I said this last time as well. We were looking for $25 as a potential upward objective. We came very close to 26, but didn't break this important level from April of 2020 of this year, of 2023. So actually, still this could be a triangle. If this week, as I said again, gold will come to the downside even lower, then even potential silver will stay trading below this trend line resistance. So this one is definitely not breaking out yet. But maybe in 2024, in a few months, there could be much better potential structure for a breakout after this wave pullback. But for now, that's not really happening yet. So short-term trades, I think that I would most likely stay on the sideline. For this longer term, silver definitely still very interesting. Now, let's take a look also on crude oil. Okay, so crude oil last week, as you know, came to the downside despite the fact that OPEC somehow and its members tried to stabilize the market, the prices with potentially new cuts for 2024. We have seen firstly move to the upside, but $79, $80 per barrel was a major resistance here for crude. So I think that for now, bears are still in play, but I think that $70 could be a very important support. There is a 78.6% FIB of that move that goes back actually from this 5-wave drop from end of October. So this current bearish cycle could actually come to an end. Okay, maybe later this week we will already have some very interesting price action for potential stabilization here. So I think that for now, crude oil on the intraday charts, on the intraday basis, it will remain bearish until we see a break below Thursday, November 16 lows. Okay, so firstly, if we are thinking that that's a fifth wave, then obviously this low has to be cleared out, and then potential price stabilization could occur around $70 per barrel. Okay, But for even if I think that maybe crude oil will try to stabilize, if you want to be long crude, you have to wait on the impulsive reaction from that support. Okay, so let the market confirm that you are on the right track, that these are the supports that really matter. Okay, I will not be looking to buy crude oil just blindly into these levels. I want to see some support to hold first, of course. Now let's take a look also on DAX. So DAX is approaching these all-time highs, but unfortunately, looking at the 4-hour time frame, this is happening with this fifth wave. So I'm not sure how much room there is left to catch some of the gains here. But keep in mind that if whenever you see 5-wave movement moving back to new highs, then you should be aware of potential limited upside. You also see that wave 5 will equal to wave 1 right at the new high. So I just think that you should be very careful going into this week. I just think that still there can be a major correction coming, especially if we see just a spike, temporary 1 to new high, and then reverse and finish the day maybe even lower, then I think that correction will stay in place. So if you're long stocks, okay, that's still all good. If you're long, obviously from much lower levels from weeks back. But if you're looking for new longs now, it's too late. If you're looking for any kind of short, definitely not a good idea either. So I just think you have to keep in mind where the price levels are and maybe just stay away from it. If we take a look also on the S&P 500, I think that this major trend line resistance for this year is still holding, still not being broken. As long as we are holding this line, there is a chance that we will see a wave E pullback. So we'll see if maybe there won't be a Christmas rally. Maybe the Christmas rally was the Thanksgiving move from the Thanksgiving holidays, or even that move started 2 weeks earlier. So I think that because we have seen a pretty strong move to the upside on stocks, keep in mind that stocks have been very volatile. There will be a lot of portfolio managers who will be looking to finish the year earlier. Okay, so they definitely have seen very interesting gains here in November. So it makes sense actually to book some profits and make some adjustments. And this could potentially cause some pullbacks here on stocks. But overall, I'm bullish for going into 2024, but I'm not really sure if we'll see this wave E pullback from here, or maybe we are going to see, there's another wave count, we are going to see wave B pullback and then more upside for wave C that belongs to a higher degree complex correction, okay, within this wave B. So in either case, I just think that there will be some retracements, maybe in December. If not in December, then maybe at the start of 2024. But after the next 3-wave setback, I just think that we could have some interesting bullish setups going on here on the S&P 500. So as I said, after this wave E, or potentially after wave B retracement. So you just have to be patient here and wait on the price action to come, or on the market to come down to much better levels. Okay. Now let's take a look also on Bitcoin. So traders, Bitcoin will be the last market that I will cover now. So I'm sorry once again for this webinar today. We had some technical issues. We will definitely be looking to improve this till next time, so that this will not happen anymore. And I will also make sure to make some free video analysis for you, so that you will be able to get the information that I wanted to provide it at the start. Okay, so so looking at gold, we are seeing some very nice move to the upside. We came out of this triangle, so that's still very important information. If you're seeing moved out of a triangle, very strong one, this is very typical, okay, because price action is very slow for a longer period in this tight range, and then everyone tries to catch the breakout, and that's why you see a very strong move in a short period of time. However, Then when move gets a little bit overextended, everyone will try to join this trend because they think that it's a new uptrend. Okay, which certainly can be the case, but keep in mind that this now appears like a fifth wave of this whole cycle here that goes back from September 11th. So I think that there can be some limited upside here, but of course, firstly, we still need to see these five subways within a higher degree of fifth wave. So 42,000, 44,000, that's definitely a potential upward projection for this week. So on the downside, watch out maybe supports around 40,000. It's a very strong, important psychological level. If we break this level, then I think that maybe some top can try to form here. Okay, but overall, cryptos are definitely bullish. I think that there can be a very interesting uptrend still in 2024, but just keep in mind that the higher degree corrections will most likely take stage before this really next potential good opportunities on the long side could show up. Okay. Okay, traders, thank you very much for your attention. So if you enjoyed this presentation, this webinar, please share this content, press a like, give us a commentary below this video, and I will make sure to provide more of those webinars in the future. Okay, traders, good luck this week and talk to you soon. Bye.